Hi, my name is Pat O'Connor. I am the broker owner of the Veritas Real Estate Group. We're located in Coral Springs, Florida. And today I want to talk about different ways that you can use the equity in your home to get cash. So the first one of these is a home equity line of credit, also called a HELOC. To start off with, home equity is the current value of your home minus your loan balance. And so what remains is your equity in that property. The lenders may want you to have 15 to 20% equity in the home before they will consider a HELOC. And then you may be able to get a line of credit on 85% of that equity. So it typically works more or less like a credit card. You would get an account. You may get a card that you can use. You may get checks that you can use. Right now, the interest rates are typically variable on this, which is not a good idea under the current circumstances. It looks like our interest rates are going to be increasing for at least the next year and maybe into the next 2 or 3 years because of inflation. So if you can negotiate fixed rate HELOC, that would be to your advantage, most likely. Interest rates on HELOCs are typically lower than interest rates on purchase loans, for example. So it would start, you would set up your account. They would give you your maximum amount, and then you can take draws, and they may set an initial draw that you need to take. They may set the minimum amount that you can take each time, but they are interest-only payments. If it's a 10-year HELOC, you will have interest-only payments for 10 years, and then the repayment period would start for maybe the next 20 years, and that would be you're paying back principal and interest. So after the 10-year period stops, then you're going to get a bounce in your monthly payment because now you're also paying back the loan balance. Unlike a credit card, however, this loan is secured by your house. Your house is collateral on this loan. That means if you don't make the payments, the lender can foreclose. And it also means during the recession, the lenders started calling these loans due, even before the, I think, before the draw period was up. And it's like, okay, we need the payments now. So read the terms of your loan carefully before you agree to one. Every lender may have slightly different twists. So you may want to get a few quotes from a few different lenders and see which works best for you. So the second way is a basic home equity loan. It's typically a fixed rate, and you're going to make payments that are interest and loan balance, interest and principal each month. And these are lump sum distributions. The third way of taking advantage of the equity in your home is a cash out refinance. So this is a brand new mortgage, and you will walk away with cash. Instead of just paying closing costs on a mortgage, you will walk away with cash. So how much cash? Well, that depends on the amount of equity in your home. So say that, and the lenders were going to want you to keep 20% of to maintain 20% equity in the property with this new mortgage, perhaps. So say the home, the new appraisal value is $300,000. the lenders want you to keep 80%, want you to keep 20%. So if you take 300,000 times 80%, which would be available to you, then you have $240,000. You subtract your loan balance. Let's say it's $150,000. So $240,000 minus $150,000 would give you $90,000 that you could walk away from the closing table with. All right, that's a cash out refinance. That money is tax free. You can do anything you want with it. It can be investment properties. It can be your own home. It's up to you. I did this back in like 2005 when home values were increasing, and I had investment property and I had a nice tidy sum. If interest rates have gone up, and again, you have the equity in your home, so your monthly mortgage now is probably going to be more than what you were paying before, unless the interest rates have come down considerably. All right, so you're going to get this lump sum cash-free distribution, but monthly mortgage payments will most likely increase. So can you handle that? Up to you. So those are the three things that I'd like you to consider today: a HELOC, a home equity loan, and a cash out refinance. Next week, I'm going to talk about reverse mortgage, which is another product, and this one is for seniors that actually have almost 100% equity in the home. So stay tuned. If you'd like to follow me, hit the subscribe button, and you can keep track. The next 3 or 4 of these videos are going to all be equity related or rental related, how you can get money from your properties. All right, so if you enjoyed this and you would like to hear more, please subscribe. Okay, thank you. Bye.